For those of you who follow me on X, you already know the big news. Well, the big news in our little community is that I sold all my shares today. And for the next week, I am a trader, not an investor. I saw an opportunity to pick up maybe $50 a share against the possibility of maybe losing $10 a share if my bet was wrong. Maybe the stock goes back up. It's back up a little bit right now. Maybe I have to buy it $10 higher, but I figured that risk was worth it compared to the potential for buying it back $50 lower. You see, the money is traded in a pension, so there's no tax consequences from my trades. Some of you, that would not be true, and you'd have to pay a big tax on your gain. See, this doesn't change my long-term position at all. Many of you are asking on X, well, what does this have to do? You thought it was going to be all-time high by Monday. Well, when the news on the ground changes, predictions go away. And the news on the ground changed dramatically over the last 2 weeks, and especially over the last day or two. So what do we have now compared to what we had just a couple of weeks ago? Well, we have a release on Robotaxi that did not convince anybody that we're in the autonomous age yet, that the Robotaxi is fully capable of being autonomous. And so people are still holding back. Anybody who was excited and interested and thinking that this was the proof day, like I thought it would be, is saying, wait a minute, you've got a 1-to-1 ratio of remote drivers sitting there at home base, and you've got a 1-to-1 ratio of a safety rider in the cars. Now, I can explain that. I can understand it, and I know what Elon's doing. But for the investor who is getting ready to get in there with their fear of missing out money, all of that went away because it's not as impressive. It's not as exciting as if it had been a truly autonomous vehicle operating in a much larger area and preferably with more vehicles. Now, all that's going to happen, and there's going to be a day. It might be this week, it might be next week, it might be the following week, and it might be 2 months from now, but there's going to be a day when the folks who wanting to get in, they know what the potential is, but they're not wanting to get in until they see it is really working. And when that day comes, then we're going to be back to all-time highs. I believe that. That's just my belief. That's my theory, okay? At the same time, the main reason that I made the decision has to do with the big fight on the ground. We have Godzilla versus King Kong. Elon Musk. You have to understand this about Elon. If you don't understand this already, let me just explain it to you. The way that I understand Elon is that he is a very, very self-righteous person in the extreme. He believes what he believes very, very deeply. He believes, right now, he believes that the United States is in real trouble with regard to its borrowing, and it needs to get out of that. It needs to solve the problem. It needs to get back to a balanced budget. So he's super extreme in his self-righteousness. Well, he's also extremely mission-driven. So he's been on a mission now for 7, 8 months, 10 months, whatever it's been. He's been on this mission that this has to be solved, and he put huge amounts of money into it to get Trump elected. Then he put huge amounts of time and energy at the expense of his companies in order to try to get it done. And now all of a sudden he's got what everybody's calling the big, beautiful bill. And he says, look, this doesn't do enough. And I'm upset. And so he goes crazy and he says, I'm going to set up a new party. And Trump, okay, now let's talk about Trump's personality. Trump is also extremely self-righteous, but it's in another way. He studies the subject, he listens, he brings in all this information, and then he makes a decision about what the right direction is. And then he's politically savvy enough to understand he can't get everything in one swell swoop, that he's got to be able to trade off stuff in order to get what he wants to get. And it doesn't all happen at the same time. So he takes what he can, and he's a ferocious, whatever the word is, he's the negotiator of all time, but he has to win. And so when he has to win, and he gets Godzilla on the other side of the room, and he's King Kong, and they're having this battle he has to win. That serves him very well and serves us very well. Elon's personality serves us very well. It's great. All those things are wonderful, except now we've got these two fighting with one another, and the epic battle is destroying all the buildings and the people that happen to be in the way. And I'm looking forward to this amazing future where Trump and Musk are working together, these two Goliaths of our time, but instead they're working against one another. Anyway, Trump's threat to eliminate subsidies for Elon's companies is about as idle a threat that you could ever possibly imagine. Someone needs to tell him that after the big beautiful bill is passed, Elon doesn't have any subsidies. And besides, he didn't want them in the first place. He said it 100 times. And to the extent that they exist, he wishes they would go away as long as the subsidies for oil and gas go away at the same time. And again, this has been repeated over and over and over again. And I'm sure he's probably told this to Trump's face. I'm sure that they've had this conversation. Well, if that's not enough if it's not enough to just mess up all the plans for the economy and for Tesla stock because of this big war, then we have to deal with the horrific delivery numbers that are coming out tomorrow. We had a ray of light last night with a surprising 20,680 vehicle sales in China. And there's some nice green sprouts in the UK, Spain, and Norway that are doing extremely well. But overall, overnight, over the last couple of days, the people who still do the guessing game, Troy Teslake, he comes out and he says his estimate right now is 356,000. Analyst consensus, though, is 385. And that's versus Q2 of last year at 443. AJ, who was 370,000 just a couple of days ago, maybe is at 344,000 this morning. That's just over a couple of days. It looks like, I think that's what he was saying in a post on X this morning. It was a little hard to tell. We've got Bloomberg at 391 and FactSet at 387, but we've got Troy at 356 and AJ at 344. There could be some tremendous disappointment in the markets tomorrow morning. So again, the combination of these two things is why I believe that I should just sit it out this weekend. I just not going to play. I took my profits and I'm just going to sit there and I'm not going to play until probably Monday. Probably buy everything back in on Monday. And if I'm up 5 points, I'm up five. If I'm up $5, I'm up $5 and I take my loss. If it's down 20 and it looks like it looks like all the damage has been done, well, then I'll buy back in. I'm all in on Tesla. Nothing has changed about my position. Nothing has changed. I believe it's going to be a $25 trillion market value company. And I believe that the number by the end of the year is still likely to be $1,000 a share. Nothing has changed about any of that. This was just a short-term play. Anyway, okay, let's go ahead. Sawyer Merritt says Tesla has revealed that their vehicle fleet has just 6.5 fires per billion miles driven compared to 55 for the U.S. average. And of course, Trump, as part of his fight this morning, throwing missiles over at Elon and Elon throwing missiles back. Part of one of the missiles that Trump threw at Elon this morning was, why wouldn't anybody want an electric car? They blow up. And of course, it's just nonsense. And this is the kind of stuff that is not making me happy this morning about either one, by the way. I'm kind of miffed at both guys. I think they need to grow up. They're acting like 7-year-olds. Well, according to Tesla, our latest data shows that vehicle fires are 8 times less likely for Tesla vehicles than the U.S. average for all vehicles. By the way, in case you don't know who this is Randy Kirk wearing my Rebellionaire shirt. And it is, hit the like button. And maybe you didn't like a thing I said, hit the like button anyway. Hit some button and then subscribe, hit notify later today. Brian White for sure at 7:45. And I think it'll be Brian Wong at, around 5 o'clock or so. Okay, so the bond market, so Goldman Sachs, BlackRock co-founder Ralph Schlotstein, I think it is, Amazon CEO Andy Jassy, all saying that inflation is over. They have no worries about inflation in the second half. Both Schlotzstein and well, Andy Jassy said, "I'm not seeing inflation in the tariff. The tariffs are not causing us any heartaches over at Amazon. Not yet, but not seeing it." Well, maybe the bond market was hearing that last night, although this morning the bond market is back up, or the yields are back up. So the yields had dropped under 25, 4.25, and now they're back up over 4.25. So not sure which way things are going. Anyway, and BlackRock, Schlotzstein also said that the big beautiful bill is stimulative. This is good to hear from BlackRock. Anyway, the real E.J. Antoni said this morning. He says, if you need any further evidence that Doge is working, they are eliminating so many fraudulent transfer payments via programs like Social Security that may saw a decline of more than $111 billion in the total number of payments. And it says, and they're just getting started. So we'll see if that continues. All right. Now, this is really crazy. So the U.S. manufacturing sector, according to the first report here, wait a minute. This is the S&P. The U.S. manufacturing sector expanded again in June with operating conditions improving to the greatest degree in over 3 years. Fantastic. Output increased for the first time since February, and to a solid degree whilst new orders increased for a 6th consecutive month due to improved domestic and international demand. However, tariffs remained a prevalent theme. People notably making purchasing decisions on prices around the tariffs. The latest data show that manufacturers raised their input buying activity to the greatest extent since April. And this could be, again, buying forward because they're worried about the future. Input costs did go up, and here it says rose sharply, but with absolutely no numbers because this is a survey. Got to remember, this is a survey. The headline index from the report, the seasonally adjusted S&P Global U.S. Manufacturing Index, improved to 52.9 in June from 52 in May. The latest reading was the highest since May of 2022. It was also the 6th consecutive month in which the PMI is posted above the critical 50.0 mark. Manufacturers recorded a first rise in production for 4 months. Growth was the second steepest since March of 2024. Firms linked the rise in production to higher volumes of new orders at their plants. Everything's looking good, right? International sales strengthened. Most encouragingly, the business confidence has continued to improve for the low point seen in April, with U.S. manufacturers becoming more optimistic in the face of fewer trade and tariff worries compared to the heightened uncertainty that they had in April. That said, many firms remain cautious. A relatively positive outlook also helped to underpin a rise in employment during June. Some pressures on capacity encouraged firms to add to their staffing numbers. Backlogs of work increased for the first time since September. So that sounds like the manufacturing sector is starting to move up, and there's a lot of confidence. But on the same day, the ISM report says economic activity in the manufacturing sector contracted in June for the 4th consecutive month. He's like, following a 2-month expansion preceded by 26 months of contraction. And the nation's supply the nation's supply executives in the latest manufacturing ISM report on business. The report also issued today by Susan Spence. The manufacturing PMI registered 49 in June, a 0.5 percentage point increase compared to the 48.5 in May. So that's actually a increase going in the right direction. But the overall economy continued in expansion for the 62nd month after 1 month of contraction in April. Anyway, any number above 42.3 over a period of time generally indicates an expansion in the economy. The new orders index contracted for them for the 5th month in a row, but the other one says it's been going up for months. Anyway, how do you read these numbers? So I read these numbers as manufacturing is still maybe a problem, but maybe it's getting a little better. The number and rate of job openings, the JOLTS index, was little changed at 7.8 million. They were expecting it to go down. The number of job openings increased in accommodation and food services, and in finance and insurance, the number of job openings decreased in federal government. So again, this is a great number because the number of job openings in federal government this time last year were going up. Now they're going down, and yet this number is holding solid. So this is actually an excellent number in terms of the economy. For hires, in May, the number and rate of hires were little changed. The number of hires decreased in the federal government. They increased in general. Separations, total separations, including quits, layoffs, and discharges, and other separations. Quits are generally voluntary separations anyway. People were about at the same quit rate. Number of total separations in May was little changed. That remained unchanged for the 5th month in a row. In May, the number and rate of quits was little changed at 3.3 million. The number of quits was little changed in all industries, it says. So that looks pretty good. But construction spending during May 2025 was estimated at 2.138 billion, which is 0.3% below the revised April estimate. The May figure is 3.5% below the May 2024 number. And during the first 5 months of this year, construction spending amounted to 841 billion, which was 2.1% below the same period in 24. Private construction. Spending on private construction was a seasonally adjusted annual rate of 1.6 billion, which is 0.5% below. Residential construction was a seasonally adjusted annual rate. Non-residential construction, that was 0.5% below. Non-residential construction was a seasonally adjusted rate of 737 billion, which was also about 0.4% below April's estimate. But public construction in May, the estimated seasonally adjusted annual rate of public construction was only 0.1%, actually was 0.1% above the April number. And so there you go. Now that is all the news there is to print right now. I hope that was enough news for you for one day. So let's go ahead and see what's happening with the markets. We'll start as we always do with Tesla. So right now, I'm wrong about $2, but the stock is headed down. So we're hitting at we're at 301.76, and that is down 5% for the day. All right. The NASDAQ is, the Dow Jones is up 0.58. The NASDAQ is down 0.72. And the S&P is down 0.24. Now, some people are saying the NASDAQ is down because the President of the United States was making threats against Tesla's subsidies. And so the Magnificent Seven and other people in the tech sector are saying, wait a minute, if he's going to make threats against a specific company because he doesn't like what the CEO is doing, is he going to turn around and make those similar threats against us if he doesn't like what we're doing as CEOs? And go after subsidies that we might have, because everybody's got subsidies, right? So this is what some people are saying, why the NASDAQ is down right now. You've got the Magnificent Seven is mixed. Apple's up, Amazon's up, but everything else is down in the Magnificent Seven, with NVIDIA down the most, 2.68%, and he didn't even say anything negative about the president. So we've got the Cathie Woods almost all down except for PayPal, which is up a little bit. All the rest are down this morning. CRISPR and TDOC, for instance, down quite a lot this morning. All right, let's go ahead. The bond market, as I mentioned last time I looked, was up. Yep, I'm sorry, the yields are up 3.1 basis points, so back up to 4.257 after being down actually to 4.219 last night, going in the right direction, but not now. Okay, so anyway, up 3.1 basis points. Then you've got oil. Oil is up 35 cents, 65.44. Natural gas down another 4.11% at $3.31. That is just so volatile, heading towards $3. We've got gold firming back up $56. Why do you think that is? People, of course, the other thing is the big, beautiful bill. Is it going to pass? Is it not going to pass? Even if the Senate passes, will the House, throw up roadblocks to where it won't pass the House again when they get into conference committee? So gold, people may be running to safety again right now, although we'll see in a second. Anyway, gold up 55.80 at 33.63. Silver at 36.48, back up 1.31%. Very getting, again, very close to that 38 and change. Copper is up 1.59 at $5.11. You've got the Bitcoin, however, not exactly racing to safety here. If it is a safe haven, Bitcoin down 1,400 at 106. And then the dollar this morning is up basically against everything. The total for dollar right now is up, not a great deal, but up a little. Okay, so there you have it. I'm going to go back to look at Tesla one more time here. We're now still headed down. We're at $300.52. And that's down 5.4 now. Just a second ago, it was down 5%. So I think it's just my look. Don't follow me. I gave you a full analysis of why I did what I did. I am not a trader right now. I have been a trader in the past, and I did very well as a trader, but I don't really like the excitement, quote unquote, of being a day trader. But right now, I saw a trade. I took advantage of the trade. So shoot me. Actually, so far on X, I would say it's about 70-30 in my favor, about 70% saying, yeah, makes some sense, and about 30% going, what? What are you talking about, Randy? What have you done? So let me know in the comments below, what do you think about what I did today? And either way, I'm expecting to be fully invested again. I don't have all of my money in Tesla. I'm too old for that. I might have, at 50 or 45, yeah, I might have been all in on Tesla. Obviously, I'm not going to sell my real estate or whatever, but, in terms of the investable capital, I might have been all in Tesla at a much younger age. But at this age, no, you have to have the bulk of your money in things like treasuries and T-bills and whatever. Anyway, so that's my opinion. It's not investment advice. It's advice for Randy. And then, I'm just sharing. It's been great talking to you.